Good morning, Sonic. Hi, everyone.
Hello.
And hi, Yosso. Welcome to the first, not the first Maker Draft, it's the fourth Maker Draft. We had a couple of these already, but it is the first Maker Draft we have, which will also feature the Maker Vault. So this is exciting for us. We can showcase how they work. Especially what we're going to focus today is the view from a liquidity provider. So a user that joins vaults to provide liquidity. So I would say I think everything is working. I can see Yosso there. Let's directly get started and jump into the content of today. And let me bring up. There we go. So you should now start to see slides slowly coming up on the right side. And first, before we get into all the topics, the material presented in this course and accompanying presentation is intended for informational purpose only and should not be interpreted as any financial advice. Please read the disclaimer here carefully. In short, there's no financial advice. Do your own research. And if you do not agree with these terms, please do not proceed with this course or presentation. So now that we got this part out of the way, let's look at the content for today. And I already teased, we're going to talk today. It's a new, we changed the training. We adapted it to the protocol development of Metropolis. And we're going to start out directly with maker vaults. I'm going to look at what they are, um, the KPIs, learn how to read them, and then also go through how do you choose a vault and track your vault portfolio at the end. This is really the simplest vehicle for anybody joining Metropolis, is to look at the vaults and build your portfolio around that. But for everybody who wants to go further and learn more, let's say not just laid back and having things done for you, but wants to learn how to use the protocol themselves, DLMM, manually provide liquidity. We have a second section where we're really going to go into the depths of DLMMing, so dynamic liquidity market making. And from a theoretical point of view, that's rather short, but then pretty quickly go into the kind of how do bins work, what are bin steps, dynamic fees, how does all of this come together, and then also deploy some shapes. So I think this is going to be an exciting presentation content wise, and for anybody who's just interested, also for me, I love joining maker vaults and seeing then all the different understanding more what the operator is doing there is very nice. With this course, you will have a thorough understanding what's happening there. So let's get started. First up, let's start. Before we go into this, I really want to emphasize that the maker vaults we just launched are fundamentally different to what you're known from Beefy or Itchy or other types of vaults you will see in DeFi. This is a completely permissionless vault ecosystem. This doesn't exist like this in DeFi in this sense. So it's really a first time, and we're launching this here on Sonic because Sonic is a super fast chain, super extremely good for a protocol like ours. That's why we're pioneering this here. So this is really the first time in DeFi that such a product exists. So I'm really excited to get now into it. So looking here in general, you can see on the left side, as a liquidity provider, you will earn all of the everything that you would also normally as a liquidity provider earn. You earn the fees from trading, you earn Metro, you earn the Sonic airdrops and airdrops of other protocols as well as Metropolis. And the nice thing about it is these vaults are deploying active strategies and they are run by bots. They can be run by AI or strategists that take care of the active position and logic. And what you will see is all the P&L, so all the profit and loss is fully transparent. And this is something we're going to dig deeper how to read those KPIs and those graphs to really understand what is happening there and is this operator profitable and how profitable is he, because you as a liquidity provider to that, you can just lay back and watch what's happening, and you always have graphs and seeing your performance. And I want to emphasize everything is included in that KPIs. We try to make it as transparent as possible. So also stuff like impermanent loss, if what you might have heard, is all shown there. So you have really a full picture. The vaults are trustless, non-custodial. That means it's not that anybody else has access over your funds. It's your keys, your funds. You can withdraw anytime. It's completely on chain and not like some other solutions where at the end a protocol's holding your seed or wallet or stuff like that. So this is not like this. And yeah, the incentives around it, it's like a win-win-win incentives that benefit everybody involved, the operator, the liquidity provider, but also all Metro holders. And we're going to get into that a bit more. Now, this is a little graphic, so but it doesn't play directly. So I'm going to pull this one up. I hope this shows. So this is a graphic that explains how maker vaults work more. On the left side, you see the user, and on the right side, you see the operator. And in the middle is the maker vault shown itself and how the value flow works. You as a user, you can see it the bottom left side. This is you provide liquidity into the maker vault. We will see you can provide any of the two tokens. Vaults are pool specific, so you can provide, in this case, either Sonic or USDC or both. And you will earn, and this is the top left, all what the liquidity on Metropolis earns. So you earn trading fees, you earn Metro, you earn MGEM points, and you earn all kinds of Sonic airdrop points for your liquidity there. The operator on the other side, he gets a operator fee. This is based on your liquidity. It's between 0.5 and 10%. The operator can set this fee, and it's on a yearly basis, and it's deducted with every rebalance. So kind of daily deducted, a small percentage point. So if you're in a vault just shortly, I don't know, you're trying it out for a week and you go out, it's just it's not that the full that the full operator fee, it's time based there. And what we will see in the KPIs later is that it's completely included in the profit and loss and other metrics. So you can always see, is the operator outperforming the fee he's setting? So you have a good overview there. And he deploys the DLMM strategy, but what is very important, the operator never has the access over the funds. So he cannot withdraw funds or anything like that. So you can provide the liquidity and you can withdraw it. The operator has no access over that. So this is a little bit the start for understanding maker vaults. Jusse, what do you think? Is this a good start, or did I miss something so far?
Yes, this is really good start for the next phase.
Happy to hear that. Okay, then let's go here. Here I'm teasing something already a little bit. You can also read up on this in our docs. We say, or we describe from liquidity providers perspective to these vaults, you have 3 layers of yield that you're earning. So the first layer is here at the bottom. It's the standard fees you're earning from the pool and the farm rewards that you would earn. And then we have the second layer, and these are all the airdrops that are going on Sonic for the protocols that are supported. So Sonic points, MGEM points, which is launching soon, and Trevi point as well. And then we have a last layer, and this is in its final phase to launch. It's now in we call it the activation layer. And this really is an incentive layer specifically for the vaults. So certain vaults that perform well, you as a liquidity provider will, on top of everything, earn more rewards in Metro, in Sonic, on top of the other 2 layers below. So this is a bit looking forward. What's going to come for MakerVault. So this is I think, is a really nice combination for anyone here in Sonic. And just to emphasize, this is fully non-custodial solution. It is audited by Audit One and Cantina, to good auditing firms, and there are vaults that are secured by Safura. What that means is that Safura DAO, which is a partner of ours, they provide insurances, and in that operator fee already, the fee for this insurance is included, and the DAO, the Safura DAO, insures your deposit there. If you want to learn more about that, take a look at Safura DAO. It's really cool, especially for if you deploy a large amount for yourself. So if you say, look, this money is important to me, I definitely cannot lose it. Might be interesting for you to look into this, and it would ensure you from hacks and anything that can be. This is now, with the next slides, we would already go into the KPIs, and I would prefer to show you this live. So go away from the slides and go into Metropolis, look at vaults and look at different vaults, look at their KPIs, and explain what you can see there, what is happening. So let me bring up the screen quickly, and I'm going to change this so we see a bit more. Whoop. Okay. I'm going to take that out in the top. So you should see now the screen of mine in larger. And this is, so when you're on Metropolis, here on the top side, you can see trade, earn, stake, and under earn. The first part is MakerVaults. This is intentional because MakerVaults will be, or is, the main product around Metropolis, and this is the easiest entry point for anyone joining Metropolis. So what you can see here, if you join, is all these different vaults, and this is really cool to see. We're live not even a month. You can see that because the P&L numbers here on the right are not loaded for most of the vaults yet. So the profit and loss numbers are not there, and yeah, it's really fresh, and it's really cool to see already so many operators deploying vaults, trying out how it works, and deploying their strategies. And I would focus on the top 3 here. And what you can see here directly is you can see here the different token pairs, and you hear different points that you're earning, if you're earning Metro and Trevi points, as well as the Sonic airdrop points. And then here are the operators. And what I find really cool is these operators, it's always a wallet behind, and you can just click here, it will bring you to DBank, and you can look at that wallet, which is operating it. Maybe there's some useful information for you to get an understanding who this person is. And then you have here 3 numbers. Right now you have profit and loss 7 days. This is how it's sorted, as well as the APRs. And the profit and loss is the key thing. It really shows you, is this profitable? How much did it outperform the underlying tokens over a 7-day period? Right now it's sorted after 7 days, and we're going to sort it on a 30-day basis because we don't want week by week different, it's kind of a different vault being on top. We want to showcase like consistent performance. So 30-day will be sorting as soon as we have more data coming in here, because all of this is still very fresh. Now, what you can see here are filters. So if you, I don't know, if you want a certain token, you just click here, ETH, or if you want a certain pair like ETH Bitcoin, you can click too, and you can get then the specific different vaults there to check out. So it's a nice filtering to quickly compare vaults and see, okay, which one might be interesting for me, and go then into the details. Okay, and maybe just to emphasize, P&L, this is on a 7-day basis. It's really the profit in 7 days, whereas APR is the annual percentage rate. So this is always, it's a different, this is kind of the standard, what you see in DeFi, what however is then extrapolated on the entire year, and what never really gives you the full story, right? I mean, I think we've all had it. We've been in pools that give thousands of APR, but we didn't. After a year, we were not 1,000% richer, and this is, we're really trying to tackle this with the P&L numbers, full transparency, that you really see what you can realistically earn in 7 days. And yeah, so this is really the goal with this, and to sort this by this performance. Okay, that being said, let's look at the first one, and I'm going to take here this Greed wallet, and it's performing quite nicely. So I'm going to click here. First up, what you can see, this is the field to deposit, and you can see here on the right, how is in this vault the liquidity allocated. I always find it quite nice to see. I think it's pretty cool. You can see what the operator's doing in the current market. You can see the average APR, vault fees earned if you're over certain days. This is just the first page giving you the basic information. And if you're allocating, we're going to do that later. If you're allocating liquidity in there, you will see your position here. And you can then see withdrawals and show your transactions here, what's happening in the withdrawals and deposits to the vault. But we also have the vault stats, and this is really, yeah, I find it really one of my favorite parts, because I'm somebody who likes to look at graphs. I like looking KPIs graphs, something that gives me a picture of what's really happening underneath. And this is what we came up with to give a good overview of a certain vault. And I would say, let's start out with, I would not go too much into this part. Let's start out with the vault stats themselves. So what you can see here is a general rebalancing activity, if it's high, which gives you a indicator, is the operator very active? Is he responsive? Is he on top of that pool? So high is always very good. You can see the number of vault users, how many have entered this vault, and the age of it. So it's 30 days. I think tomorrow will be the first P&L showing on a 30-day basis. Yeah, and then you can see here profit and loss, and you see here 3 different numbers, because this is a Bitcoin USDC vault. So we are comparing the profitability against holding 50-50. So let's say you put in $1,000 of Bitcoin and $1,000 of USD, and what's your profit and loss after a week? It would be 1.65%. So outperforming holding those assets by themselves, the Vault outperformed that by 1.565% in the time span of 7 days. And then you have also the P&L against Bitcoin only, holding 100% in Bitcoin or holding 100% in USDC. And what is really nice to see here is that it is outperforming all three. So no matter, this is really rare. It's rather difficult to get that you're outperforming no matter what. This means that the Vault has been operating in a way that it's outperforming both underlying assets no matter the allocation. And I'm really curious to see here the 30 days, but I think you can here already in the graph see a nice indicator how that turns out. Now the next thing are charts. I personally love charts, so Jusso, if I'm going to talk too much about this chart, you stop me and say, oh, we've seen enough about charts. Or if you want to add something also, please.
Yeah.
But I think this is really cool. It's at the beginning when you look at it, you see all these lines and you say, okay, this might be a bit busy. But once you get an understanding what each one does, I think it's a really nice visualization to see performance. So what you see down here is profit and loss, MVT. I'm going to explain this one in a second. The token USDC, which is one of the pair, Wrap Bitcoin, and the 50/50 hold. Now let's go one by one. Starting with 50/50 hold, I'm going to go from the right to the left. I think it's easier from an explanation wise. This is this white line. It shows how would your performance have been. It's this white line down here. How would your performance have been if you would have hold 50/50, not in the Vault, just those two tokens, 50/50%. The second one is USDC. This is quite flat down here. There it seems that USDC depegged shortly, but generally you can see also it's very flat. USDC, obviously from the performance, just holding USDC is quite flat, around 0%, because it's measured in dollars. And then you can see only holding Bitcoin. This is the orange line up here. How would have the performance been? And now the first new thing that needs some explaining is the MVT, we call it. It's the Maker Vault token. So the Maker Vault token represents the entire liquidity in the vault. And you can think of it as this shows your performance without any Metro rewards. So if you provide liquidity in there, the vault is holding, in this case, USDC and Bitcoin. It is earning fees from trading volume, and it obviously depends on what it is holding more. When there's an uptrend or downtrend, it earns on the performance of the tokens it holds. What is it paying? It is realizing impermanent loss or impermanent profit. That would be a good thing. Impermanent loss is the negative side of it. And you're paying operator fees in it. So all of this goes into the MVT token. And you can see this MVT token is outperforming the 50/50 hold. So if you would have held just 50% Bitcoin and 50% USDC, the vault is outperforming that just from fees and how it's allocating and holding the liquidity. That's what shows you the MVT token. It's always nice to see if the MVT token is somewhat around the 50/50 or above, because that shows that the operator is really taking care of that the liquidity within the vault is managed properly and takes advantage. It is either neutral, right? It's trying to earn fees and is neutral, or is taking advantage of certain market movements. Now you have the profit and loss. It's the MVT token plus the Metro rewards that come from the farm. So as only 80% of the fees go to the liquidity providers, and a percentage is going to Metro stakers as well. There it is important that, no, it's not important. Liquidity providers also earn Metro rewards. And these Metro rewards are shown here. They auto-compound and can be harvested by anyone joining. And you can see here with Metro rewards, how is it performing? And there, I think it's really nice. You can see here now on a 30-day basis, in total, you had these 11% profit and loss. And you can compare that with 3.87% hold if you're 50-50 hold, which is a really nice P&L. So this is a very nice profitable vault, and these graphs show that. Rewards.
Just to add, you can click on the PNL MVT USDC to hide the lines if it makes.
Wow. I didn't even know that, man.
Really?
Yeah, I didn't know that. This is really cool.
Yeah.
Ah, nice.
For the stablecoin pairs, I like to hide the USDC usually.
Yes,
because it's always one.
Yeah, so you can see kind of, okay, how's the performance against it? So this is now kind of 30 days, and you can see just against the dollar, how was the performance? If you have deployed dollar-wise in here, you would have made 11.9% plus. Nice. Cool. Thanks, User. This is really cool. I learned something again about a protocol. So if these are too many lines for you, just blend out the ones you don't like, that are too much. I think the 50-50 hold is also always nice to see. Really cool. Nice. Then let's go reward stats. So in the rewards, you can see here, it just shows the daily rewards that are earned in Metro. And if you're somebody who's maximizing Metro or wants to, or looking at that, you can see here at the cumulative rewards as well as the daily ones, and over time, and this will always update further and further, and you can look at it in different time frames. And then we have one more thing. This is a rebalance heat map, and this shows you how active the operator is, and you can see, okay, you can see less or more activity, and then you can see if this looks nice green. I mean, if it can be sometimes strategically not to rebalance for a certain time period, so that's okay. But if you can, if you see general green here, this is a good indicator. This vault is being taken care of well, and is a good indicator for you as a liquidity provider. This is a well taken care of vault. Okay, I think from a KPI point of view, we are through. I would say let's try it out and deploy some liquidity. What do you say?
Yes, let's do it.
Okay, so as we do this, I go back to the overview. Let it load for a second. And I'm just going to look at the first one, and maybe because I took a look at this one before, and this is interesting to highlight how this differentiates to the vault that we've just seen. So here you have all the same information, you have the P&L numbers, the data, but here you can see in the historical chart something really interesting. And that is that when you look at this, you see that here the MVT token is going down a lot, whereas the P&L is going up. What this shows you is that this strategy is very aggressive. It is profitable. So you can see it's a profitable strategy, but it is printing a lot of impermanent loss. So this vault is profitable, but due to the Metro rewards you earn, your MVT token, so your base liquidity the Sonic and SC USD that you deployed in there have lost value by a lot of percentage points, but the Metro rewards kind of outpaced that. So if your overall the profitability has been good, but it's a trade-off that you would as a liquidity provider take, because you can see, okay, the MVT token has fallen down a lot. So going into this vault would mean that my Sonic SC USD is shrinking against a 50-50 hold, which I personally try to avoid. So in this case, I would not choose this, but somebody who is after the high APR, high rewards, this is pretty much how it looks like. So this may be also a good learning for any other protocol out there. If you concentrate a lot and rebalance a lot, you might still be profitable, but it's you are getting hit. Your bag is getting hit due to impermanent loss. So for me, I'm going to go one back, and I'm just going to take the next one. This was the greed one we've just been talking about. So I'm going to deposit now, and what's really nice is you can decide this is what is in the wallet. You can just put Bitcoin, just put USDC. You can really, or a combination of both. It's completely free to do as you wish. So in my case, I'm just going to put the Bitcoin that I have, put it in, deploy it. Check and deposit. I just love how fast Sonic is, really. It's really, really nice.
Yeah, definitely fastest chain I've used.
Yes, and cheapest chain. So this is really cool experience. You click, you deposit it. Now you can see your deposit. You can see your balance. You're now not holding the Bitcoin anymore. You're holding a portion of the vault, and this is the distribution. So this vault is a it's kind of a is still heavy, has a heavier allocation in Bitcoin. I think this is good. I believe Bitcoin to perform still well going forward. So this makes me happy. And then here I can directly claim then my rewards when I want. Yeah. And I see some APRs and the stats that we've just talked about. I want to show one more thing. And for that, I might just go into the vault from Fanatic, because at the end, I also want to show you the dashboard that we have where you can then track your portfolio. So this is Fanatic's vault. What is interesting is that I know that this one is semi-automated, right, Yuso? Or is it fully automated?
I think it's fully. I think Fnatic sometimes do some fine tuning, but mostly it's running automated.
So, and this is also really impressive. You need to understand the last weeks in Sonic have been not easy to manage. I think as a liquidity provider, you want ranging. You earn the most if it's price stable and just ranging in a certain area for a long time. That is how you make the most money. And that volatility we had with the airdrop in the past week is extremely difficult to manage as a liquidity provider. And this is really impressive to see. So on a 7-day, it's pretty much it was not hit heavily by this. And on a 30-day, you can still see a good profitability of both. So profit and loss, as well as the MVT token outperforming well. So this is also a nice. So I'm going to allocate some in there, and I think this is good vault. And this is also the big difference to itchy vaults, right? Because itchy vaults or beefy vaults, they just rebalance. They just print your impermanent loss, and here you have the combination and an environment where all these different operators are competing for the best real profit and loss. And this is really what we want to create, is an environment where then the best vaults, are an environment where kind of the best vaults then accumulate the most liquidity, and where the best vaults can really showcase the performance. I think this is really, really nice. Yeah, you can see I'm hyped about vaults. I think just gonna deposit some here. So
I find it funny to see kind of competition in our socials between the
yes,
operators.
yes. I mean, right now with the 7-day P&L, you also have that. It's the ranking is still way more fluctuating because of the 7-day P&L. One day Sonic drops more, and maybe some operators are more allocated in Sonic, then their P&L goes down, and then the next day it goes up, and then you see the P&L going up again because it's against the 50-50 hold. So I think it's right now it's still, I would say, volatile who's on top, but that makes it, I think, interesting for the operators. But soon with the 30-day, it will be more stable, and I think the more clear picture would come out. So now I deposited some vaults. I had one already deposited before, and up here you can see dashboard. And if you click there, I think it's a really nice overview. You can see, okay, from all your liquidity positions, what's your token allocation over all the vaults that you're holding. You can see the overall APR that has been over this last 7 days, and the overall rewards APR. And then this is all still just total Sonic points. Trevi points would be here. I mean, just deploying now, so it's not showing much yet. And you can see claimable rewards. And then you have here your vault positions, and you can, you see if they're profitable, how they're doing, and you can just open them up, and you directly have kind of the most important information. So it makes it really easy as a liquidity provider into vaults to just always check, okay, how are things going? How's the price moving? How is it allocated within the price? I think this is nice. So you can see, okay, this is the allocation now, okay, and you can see the graph with the performance, and you can harvest here your metro, and manage if you want to change or something, put more liquidity in or less, you can just manage here and do so. But it's a very hands-off experience while having all the data to always show you, okay, how's the performance doing? And this is also really impressive. This is a stable vault, SCUSD, USDC, right? So 2 stable coins, and you have a performance P&L over the past 30 days of 2.75%. I think this is really good. Take that times 12. It's a really nice APR that you get out of this, and you can also see that the MVT token is also profitable, like 0.72%, and operator fees and all of that is already included. So this is a really, really nice vault as well, from Undercraft, I think. Undercraft, yes. So this is, I really like to look at these charts and see this going out, because it just shows me, okay, the profitability is rising and rising. Okay. I think, Yusso, have we covered vaults fully with this, or have I missed something?
Yes, I think so.
Okay. Then I'll go back. Give me a sec. Let's go back to here. And I'm going to skim through now the slides. We covered that in real life. Here I show a bit more the liquidity position, but we covered that as well. The filters, okay. The dashboard. Perfect. Ah, we forgot. We forgot the
Vault
the,
cards, yeah.
the vault cards. Let's yeah, I'm gonna go back, showcase that. This is a really nice feature. So for example, you're in a vault and these will be utilized more going forward. And this is rather the technical implementations there already. Is if you're a liquidity provider or an operator and you really like, for example, you're hyped, this is a stable pool and having this APR and you want to share this, you can either here share the link directly. So this copies the link. But what it also is, you can create a vault card. And this is still going to change a little bit from the layout, but it's going to be very, very similar. And what you can see here is then the token bearer, 7-day P&L of it, and who is operating it. And then down here, you have some more information. And I think this is really, really nice. And here on the right side, you see Aria. And depending on the performance, she's going to be happier or less happy. So you can, if you're very happy, you can share this performance. You just bring here to clipboard, paste it, or you can download it and then use it in Discord, in Telegram, or on social, any of X or any social platform you want to share it. This is a nice way to help the operator share his performance, as well as it's a really nice way to, yeah, showcase nice P&L numbers. And just to make the case, let's go into let's load go any vault that has a little bit of a harder time right now. I think wrecked is maybe a good word also for it. The vault card. Then she's very angry, as you can see. I think it's really nice. So you can use this one as you want. Everybody can use this. This is not a feature that is gated or something. Anyone can use these vault cards. Okay.
When you go to the vault stats on that specific vault,
Wrecked one.
yes.
Yeah.
You can see that the 7-day P&L is bad, but when you check the overall P&L, it's much better. It
Oh yeah,
really
it's actually
depends.
good. Yeah.
Yeah,
This is a
because
good
there was
case.
huge
Yeah.
fluctuation in the price.
Yeah. This is a nice case where you can see, okay, big fluctuation in price as we had in Sonic can momentarily hit the P&L, but this shows that you like on any other platform you just don't know about it, you just don't see it. But here you will see it directly what it did to your portfolio, because this is always against the dollar, right? So I think this, yeah, good point, Yusso, and nice, good for pointing this out. So the wrecked vault is not that wrecked. It's good for anybody. Okay. So I am this I've shown. Okay. So we've covered maker vaults. We covered what they are, how they're secured, the whole ethos behind it, as well as looked at the KPIs and how to track your portfolio and all of this. And I think this is the ideal one for anybody who says they want hands off, just and want the operator to do kind of the trying to understand the markets and implementing the strategies and stuff. This is the perfect solution in my mind. I see myself as a liquidity provider to Vault, so I personally like to use this because I don't have time to manage my liquidity so actively. So this is perfect. What we're going to go now is the next part of the presentation is, or the training better said, is going more into DLMM. This is the base protocol of Metropolis, what makes it special, as well as looking at how to deploy manual liquidity. This is more advanced, and this might be interesting for anybody who wants to DLMM as well, because there's some advantages. You kind of can use it almost like limit order trading, but it's with some, let's say, perks to it. Or for anybody who actually says, hey, I like MakerVolts, but I also like them from a operator perspective. So I'm anyway like to do this, and with Volts you can earn the Volt operator on top for what you're doing anyways. And this is a good kind of entry point for anybody there who wants to go down that path in that direction. So let's not talk more about it and get into it. So just starting, DLMM is a concentrated liquidity protocol, and it concentrates liquidity within so-called bins. So you will always hear a lot about bins and strategies around the bins, and this is very unique to DLMM because in UniV3 the liquidity is concentrated horizontally, whereas in DLMM it's concentrated in these vertical bins, which gives you which comes with some benefits that we're going to touch on. And the main benefit just generally of concentrated liquidity is, if you see here, liquidity price between 0 and infinity, and between $40 and $50 in this case, you can see that more of the liquidity is concentrated in the active trading range, which is indicated by these lines, and this makes the liquidity at the end more efficient, especially if managed well. This is a quick comparison. If you're kind of joined in DeFi summer and might have taken a pause on farming in the meantime and now coming back, you're still used to the V2 pools, and they still have their use cases in DeFi. And this is just showcasing the differences, but basically very volatile tokens. For them, V2 pools are good because your trading is always possible. Liquidity is they're not very efficient in earning fees, but it's a good way to provide liquidity for very volatile token pairs. So it's a good base liquidity. Whereas DLMM is very efficient. You can earn high fees, high rewards. You're enabling zero slippage trading with it. So you earn dynamic fees. So if there's like more volatility in the market, the fees get ramped up even more. So there's a lot to take advantage of, but you need to actively manage it. And there you have the risk of so-called impermanent loss and impermanent profit, which means that while your liquidity was there and the price moved, you are holding the weaker asset after that price move. And if you then trade it back, you realize that impermanent loss. And this is always something when you do concentrate liquidity, for example, in the DLMM protocol, it's always something you need to manage well. That's why these vaults with the operators, we have all these graphs to make sure to showcase if the liquidity is being managed good. Now, what are bins? Bins are, you can see here on the left, you have token A and token B. And as I said, they're like liquidity pools at price points. So this is price point 1 to price point 7. And for each price point, there's a liquidity pool of liquidity. There's always only one active bin. So this means that trading is right now at this price, P4. This is where trading happens. And as the trading happens, you will see here this line kind of going up and down. Let me see if this is in. Yes. So this is kind of when trading happens. And this is then slippage-free trading. There's no price impact in the trades. And this is a nice, everything on the left side of it, you will see is token A. And everything on the right side is token B. So what you have here, only one active bin always, and the two sides. And as price moves, it moves can move along these bins, and when the price moves up or down from P4 to P3, it then jumps from one bin to the next. So this is how DLMM works as a on a protocol level. Now, I'm gonna take a little drink. Now, when you see on Metropolis on the pool page, you will see numbers like bin steps and fee settings. And the bin steps are, you will see between 4 and 200, and these show how much does the price move from one bin to the next. So if the price is moving from one bin to the next, what is the price difference with that? The second setting, what you can see here are fees. So fees here between 0.04% and then higher percent, like 2% fees. This is what traders would pay in the pool for trading the tokens there. One thing to note here is bin steps and fees come in different variation, right? So it's always still blocks, like the 4 bin steps comes with 0.04%, or are they completely independently choosable?
For users, then we can choose any, team can, but when user creates the pool, they are predetermined.
Okay. Okay, perfect. Thanks. And these are differently efficient. So if you have a very volatile token, let's say it's a meme token, it probably makes sense to take a larger bin step with a larger fee settings because it's very volatile. And if you have something that's more stable, then you will rather be here on the left side with lower bin steps and lower fees. And for the same token pair, you will see different pools. And we're going to go into that because they can be efficient in different times of the market. This is generally the with DLMM, that you really have pools optimized for the current market. That's what is also a part of why it's really efficient at creating volume and fees with quite little liquidity. Now, just for you to know, 100, so bin steps, 100 basis points is 1%. So that means the price would move from one bin to the next by 1%. This may be as a kind of, okay, how to evaluate this number. I think this is always easy to remember. Okay, 100 is 1% up and down, and then you can work from there accordingly. This is how it looks. So you will see these are the bin steps, one to the next. These are the small ones. And if you have the small bin steps, you have many, many, many little liquidity pools, bins on the same price range. As with larger bin steps, you have way less bins covering a certain price range. And this is important to understand when you're manually provide liquidity. In the vaults, you do not need to care about this. But when you provide manual liquidity, having understanding how many bins cover how much of the price range, it's shown in the front end, but it's important to have a overview and understanding of that. And then here, when you see the price moves, this is as an example, with smaller bin steps, way more bins, it goes through way more bins. And the result of that is the fees might be lower in a small bin steps, but the dynamic fees kick in a bit faster. And as the dynamic fees kick in, you as a liquidity provider earn more. And this is really something special and unique to Metropolis, is that the oracle for this is built into the protocol. So there's no latency, it comes directly, and that makes these pools also very efficient. As soon as volatility comes in, boom, you directly the dynamic fees come in, and your fee earnings go up. And I know that there are liquidity providers in the Sonic ecosystem that are very good at taking advantage of these price movements. So they detect, oh, there's volatility in the market, the dynamic fee goes up, and then they strategically allocate liquidity to then harvest those fee rewards and the protocol emission rewards on top. So this is something, if you're really into it, you can really play well with it. So yes, lower dynamic fee, higher dynamic fee in this instance. And now when we talk about fees, on many other protocols, especially in Sonic, you have mostly V33 dexes where actually all the fees go to the token holders. So I know that Sonic communities are not so used to earning fees. I sometimes have the feeling. But in Metropolis, 80% in DLMM pools goes directly to you as a liquidity provider. So you earn that fee directly. And how you earn it is it auto compounds in your bins. So let's say you have here an initial position, token A, token B, and the price moves up and down from the left to the right to the left. This in the top, you now see, you will see that the shape of your liquidity will start to have these little hills. These are the fees that have been auto compounded. And it also gives you an indicator of, okay, where has been a lot of price action and in trading happening. And these fees auto compound, and you would need to remove those bins in order to harvest those fees. So you do not need to manually harvest those fees. The front end will show you what you've earned, but they're all within the liquidity of the bins, auto compounding. This is something really important for the vaults as well. That's why all the fees coming in directly feed into the MVT token. Just to make that bridge there, this is a nice feature there. That's why your position then after a while might look like this as you earn fees over a certain time period. Now, you also have farms. And here, the farms that Metropolis has are not any external scripts or something. This is also built in, and it always rewards the active bin. So rewards are given to liquidity in this bin. And you can kind of see it then it's always like a little grayish behind where the active bin is being rewarded. Now, this does not mean, and I think we had some misunderstanding by some liquidity providers in the beginning, or let's say not misunderstanding, but there was a big to maximize major rewards. This does not mean you should allocate all the liquidity in one bin because you're concentrating heavily and you're going to run into impermanent loss. And as then the price runs up and down, it's the same if you allocate now over a larger range, your liquidity, and the price moves up and down. It's the same kind of, you will earn along your entire liquidity. Whereas if you concentrate now in here and the price just moves one tick away, then all of a sudden your liquidity doesn't earn and you need to rebalance and re-bring the liquidity again into the active zone. And we can see later in DLMM, it moves all the time. It goes up and down and up and down and up and down. So it doesn't really make sense to just allocate your liquidity accordingly as your strategy is. And the front end will also show you what are kind of gives you a hint of APR, how much you can expect to earn APR wise and fee wise there. Gives you an indication for that. So this is not a advice to concentrate, but just to showcase how the farms work. Then on the pool page, we have KPIs, and I just see this is the old. So this slide will need an update, and I can showcase that also later in the decks directly. So you will see APR, and you can see then, okay, from the APR, how much comes from trading fees and how much comes from Metro rewards. So you can see there, this was I don't know, from some time ago, where you can see then also when you hover over the distribution, how much fee rewards, how much meter rewards are making up the APR. And important, the APR is taken over the entire liquidity in the pool. So if you're, it's not taking, only in the, let's say, plus minus 2% range. This is not how it's running on Metropolis, where we're taking the entire liquidity in the pool, assuming this is a general allocation of people, like a medium normal allocation, and then we give the APR, we calculate the APR over the entire liquidity. So this is maybe good to know. It's not based on a concentration, but as you deploy your own position, you will see a personalized APR just for you. I'm going to show that in a second. This was the theoretical part of the DLMM training. We went through bins, how they work, the fees, the farms, dynamic fees, how this all comes together. And I would say, let's deploy some strategies. What do you say, Yusso?
Let's do it.
Let's do it. Because I think here the next, this just showcases it. So I'm going to go back. I'm going to go back to the other screen, giving a second to come up. Okay, so this is where we left. We were at MakerVaults, and we have here all pools. Now we go away. These are passive strategies for me as a liquidity provider. I do not need to do anything for MakerVaults. And now we go to where we need to be active. And let this load quickly. You can see different pools here. You can also search here up here if you want, I don't know, a specific token that you're looking for. But let's say I want Sonic USDC. I can see here the points that I'm earning, Sonic points, if it gets Metro rewards, liquidity, as well as volume over the past 24 hours and fees. And you can see here already the efficiency of DLMM. So this one has low liquidity right now, but the volume is still like 267,000, almost 5 times of it, 5x the liquidity, which is a good number. And then down here, when you open this, these are the different pools. What we shared, there are bin steps. This is a 4 bin step, 10 bin step, or 20 bin steps. And these are different fee tiers allocated to it as well. And as I shared before, it really depends on the market which one is better. So we cannot say, this is, you should only go into this one. You can only go into that one. Or this is the best, or that is the best. They come with their advantages and disadvantages. So when you look at this one, for example, the 4 bin step, I'm just going to go to showcase. The price, this is very concentrated. So the price will move a lot up and down, generally during a time. And you will need to reallocate quite often unless you build up a very, very large position. So it's just something to be aware of when choosing these pools, that they are quite volatile, normally speaking. But then, so I have here, I'm just going to take this 20 bin steps, or let me see. I'm going to take the 10 BPS pool. I click here. I see the liquidity distribution. I can see liquidity APRs, volume fees, and what the composition is, how many Sonic tokens are there, how many USDCs on there. And you can just see here how the price moved of a certain range. I can zoom in or out, depending on how big I want to set my allocation. Now, this is my deposit part. And what I want to do now is, in this simple mode, you have a simple and an advanced mode. I want to start with a simple mode. I think it's quite, start simple, right? You can add only one, or you can add both sides, 25 here, and then it directly shows you your allocation. Okay, and you can choose different bins. So you can do 11 bin, that would be very concentrated, 51 bin, 81 bin. Okay, I might feel more comfortable with this over the past 7 days. This is just a indicator for a chart. If you are more serious about it, you might want to see more price history, price action, then you can just click here on these buttons. It will bring you to the pool on Deck Screener or CoinGecko, Gecko Terminal, I mean, and you will see the price history of that specific pool. So this may be handy to know before you want to build your strategy, then you can use this. And here in this case, I'm just going to take this one. It's quite easy. Going to enable USDC, confirm, and provide liquidity. Important to note is I need to provide both. Whoop. Yeah, it moved too much in the meantime, so I need to reload this. It was too much. Sometimes when it moved too much, the price, you're looking at it for a long time. Then it tells you, oh, the allocation is a bad price, so it warns you and reverts the transaction. In this case here, I'm gonna set this up again. You need to set both, but it's not need to be 50-50, but I kind of do 50-50 right now. I confirm. Now the transaction submitted. Took. And now I can see my liquidity position here. On the right side, I can see the balance. It will start earning APRs. It will take a while until it shows. And it will also be in my dashboard. I'm going to show that later on. So this was the simple mode. But you can do much more than simple mode with this. So for this, let's go back to the presentation, because now we deployed into the simple mode. But the advanced mode is actually what gives very nice, what gives you a lot of flexibility. And that's also the flexibilities that the vault operators work with in DLMM, is you can create all kinds of different shapes. So in the advanced mode, you can take bid ask, curve, or spot shapes. And what this is depending on what you choose is, for example, the bid ask would allocate less around the trading and the current trading bin, and then increase the allocation to each side. This is very handy if you want to decrease, have less impermanent loss, or if you want to scale in and out of tokens, the more price changes. So it can be for example, you have you want to, you have a strategy where you want to sell off, let's say, ETH up to I don't know, 8K or 10K over the entire run. Then you can just have a one-sided bid-ask position all the way up there, and then you just let it convert and then remove the bins. And this is a way of trading them as well at the end. Curve concentrates more liquidity around price action, so the opposite. And spot is just a general distribution flat. Curve is always more aggressive. Bid ask is a bit more careful, or and spot is something in between. And let's start with the bell curve, so the curve one. The goal there is you want to provide deep spot liquidity around price action to maximize revenue from fees. So this is especially good when volatility is low in a certain time. Then this one makes sense. It's generally also a good fit for all kinds of stables, pools, LSTs. So correlating tokens that, where you do not expect too much price movement, or where you do expect reverting to the mean. So even, for example, SCUSD and USDC, they do move. So it's not always, it does move, but you always expect it to go back to the mean. So this is a bit there where you can use this. And I would say I'm going to jump back and allocate this into a pool. So this was a curve. And which pool is good for curve, Yusso? What do you say? You're a bit better at this than me, so I would.
I think the Bitcoin is really nice.
It's good.
Yes.
The 10% one?
Yes.
Okay, I'm going to take this one. And I can see here the allocation. Here, look. This is, you can see in the how people are using it. So you can see here the liquidity that many people are allocating USDC down here in these kind of bid-ask shapes, because as they're hoping that the price goes down, and as it goes down, they would convert their USDC to Bitcoin and then remove the bins, and this way they trade into Bitcoin while they earn fees, while they earn rewards. So it's a very nice way. You trade and you don't pay fees, but you trade and you earn fees and you earn rewards for it. So it's a really nice way of DCAing into a token. So you can, it's nice to see the strategy here. So I'm going to do this. No, I wanted to do curve. So I'm going to do curve. Okay. And I don't have Bitcoin. I put it all into the vault. So I can now swap here directly. I can take any token. So I do not need to have Bitcoin. I can do one-sided, but in this case, for the I kind of want to do. I want to have it a bit more. So we have. So I'm gonna take. Each one hurts. I'm just gonna take some of these to Bitcoin, BTC. There we go. And just gonna do 50% to Bitcoin. Trade quickly. Oop. Trade. Okay. So I withdraw. Don't withdraw. I have swapped. So I have here now $39 of Bitcoin. I'm gonna put in the same amount. I do not need to do this, but I want it in this case. And I go in advanced mode, click here, and then I can choose here, spot, curve, bid ask. And we're gonna do curve. And now I can see here the price range. I can see here the allocation. And what's really nice is you can move here now, okay, to fit that better, right? So I can see here, okay, this has been the price action recently, and maybe I expect it now to, because I don't know, lower highs, lower lows, so I expect it rather to go down. So I can allocate like this, and down here, maybe go down to, and I can see here also the price. So I can maybe allocate down to, I don't know, 12,000 like this. And here I can see the estimated APR that I would earn. I can see the amount of bins that I would allocate it. And here I can see the price range that I'm covering with this. And maybe I just say, okay, I want to cover the whole one. So I maybe from this point, no, this is good. So from this peak here. So this is now very simple. I could also use this one down here. We're going to use this later on where I can input directly a price point. And I can see my spread, plus 2%, minus 3% it is right now. I can make it way bigger down here by clicking here. So when I click here, I can make it much go further and further down. But I don't need it right now, so I'm just going to go like this. I think that's fine. And then I would allocate. Now I hope I wasn't too slow, but let's see. I'm going to enable Okay. Provide liquidity. Boom. My God, it's so fast, man. And zack. So my liquidity is in. Will appear here in a second. I can see now my allocation here. I can see all the different bins. I can see the deposit, how much is in Bitcoin, how much is in USDC, and then I will see here the fees earned over time and my APR. Okay, this is nice. Okay, perfect. And here, maybe for rewards, I could always harvest here Metro rewards if they're incentives, and I can see here more information about how much Metro is being emitted in this specific pool. And this is also seen up here. So you can also see that in the graph up here. Okay. I think this was a good curve. Thanks, Yuso, for the kind of monitor this over the next days if it's profitable, and if not, I'm going to write you a direct message.
Nice.
Very nice. Okay, so let's go back to the presentation. We now looked at curve, and you will see that sometimes when you join vaults, that the operator will use this shape for certain strategies when volatility is lower. Now this is the opposite. This is the bid ask. The goal is to reduce impermanent loss. It can be used for swing trading or DCAing in and out of tokens. So DCAing, dollar cost averaging. It's fit for for large, mid tokens, all kinds of, and small cap tokens, but it just needs higher maintenance as all of these DLMM strategies. And I would say also here, let's go directly into the protocol and deploy this strategy directly, that we can see how this works. Okay, so I'm back here and I want to bet. So I want to do a one-sided bid-ask position. Where should I bet on? Where should I fish some tokens? Should I try to fish some Sonic tokens?
Yes, I think Sonic will do good. There is much hype right now.
So it found it's through the it found some strength now. So but in this case, so if I do a one-sided bid-ask position, I hope for more drops so I can get more Sonic. So let's go. I'm gonna use this 0.25% pool because I wanna cover a larger range. So with less bins. So I'm gonna take this. Okay, this is the allocation. And now I can do a one-sided position. So again, here I want to buy Sonic in this case. I go in advanced mode and Jusso's typing heavily. And,
Sorry.
all good. And then here, what you see here, I can do bid-ask position. And here again, I see the price chart of the past days. Then I can say, okay, I only want to provide USDC, and I want to provide it down. If FUD comes again, maybe it would come all the way down to before. So I go to there where it was. I say, okay, if it goes down here again, I want to allocate more and more into Sonic. So as the price moves down, all these bins will step by step be converted to Sonic. And then I can remove them. And that way I trade them while earning fees. What you will see here is estimated APR 0 because I do not allocate into the active bin right now. I only allocate below the price if the price falls. So let's do this. It's a minus 10% from here. And I'm going to enable I'll provide liquidity. There we go. Zack, done. So what do we have here? So I can see my position now. I'm not earning anything, no fees. If the price will go down, I will see these being converted, but then I need to be active and remove those bins step by step. Maybe we'll see this during our stream, then I can remove 2 or 3 bins and we can take a look how that works as well. Okay, this is, let's get back again. We have to the overall. The last one is the spot distribution. Here, it's your goal is just capturing fee revenue for tokens that are ranging in an area where you do not want to concentrate around current price action or reduce with the bid ask. You're saying, look, this is the range. I'm gonna have a spot distribution over the entire one, and I just want to accumulate fees. It's still, I think down here, this is not very accurate. Simple deployment, lower maintenance. This is not really true. It still needs maintenance. You need to check if the price stays in the range. And yeah, but it's obviously a curved distribution would concentrate even more and would need even more checking there closely. We kind of did this with the simple mode, so I'm not going to do this now in the advanced mode again because it's the same kind of thing. But one thing, what I could do, so I think what would be good to see is once the batcher, right? So if you would deploy over a larger range, that we deploy once with a batch or something.
Yes, that's good.
Yeah, let's do that. So going back, this is where we've left off. I'm gonna use the batcher now. I'm gonna go into back to pools. I'm gonna choose a pool. Let's say here, ETH, and take ETH. Haven't looked at ETH today yet, and ETH is pumping right now, right? Came back from the dead, so I think this is a nice one to use. So there, in the ETH position. Oh wow, what kind of? Oh, so it's down here. Okay, this is ETH Sonic. I could do ETH Sonic. I can do ETH USD. I think I'm going to do ETH USD, and I'm going to take the 2410. I'm going to take this one that already has liquidity, and here I'm want to, let's say I want to scale out with a normal distribution. I don't need to put all. So I'm going to scale out with a normal distribution from this token. So from ETH. So as the price goes up, I'm gonna convert more and more to USDC. And for this, I go in the advanced and I move this up. And then you can see when I go here to the right, I already allocated 40 bins and it goes to the price of 3,888. But let's say I want to have it way further. Let's say I want to scale out until the price of, I don't know, what did Ben Cohen say recently? 7.5K or something. So what I can do here now is put in here a price. So I say 6,000, just 6,000. I type it in, and then you can see, okay, this is the entire price range I would allocate over, and you can see the amount of bins is 475. So this is more than normally you can do in one transaction, because each bin is its own NFT position. So allocating this at once, we the blockchain runs into certain limitations. thresholds. So we need to cut it one transactions max. So I'm just going to do now, let's say 5,000. Then we still have a batcher. And then goes on to, it's like 303 bins. Let's do 300 bins like this. So around 5,000 price. And now I'm going to enable. And now you can see how the batcher works. So I confirm. And now I provide liquidity. And the batcher creates now 4 batches where it allocates liquidity. And it guides you through. So all you need to do is just wait. And then the next transaction is called, you confirm, you wait again, then the next one comes up, you confirm. So it just guides you through the batch process to allocate all these, I don't know, 300 bins all the way to the price of 5,000 USDC per ETH. So I've seen it. Boop. And you can see now all these bins that have been deployed. And this is again why Sonic is a really cool chain, because all of these things, some limitations of DLMM have been obviously when you've been on ETH and each transaction costs a lot. And on Sonic, with the speed and with these prices, DLMM starts being super competitive against the standard protocols, in V3, in the Uni V3 models, because the gas is getting less and less of the, let's say, of the bottleneck. And we know in DeFi it will be less and less and less. It's a run down to zero. I think we know that this is kind of the trajectory that crypto is in. So I think the DLMM protocol is really nice position for that future, where the gas costs are playing a smaller and smaller role. And on Sonic, you can see it already. It's a fraction deploying these shapes, which would cost on ETH a lot. Yeah. So I see I'm happy with these positions. So we use the batcher. I think this is cool to have covered. And let's go back now to see that I don't miss anything. Next is stacking. And stacking is something where you combine different shapes with each other. So you have a deployment where you have here, for example, a bid ask. There's current price. You can see it here on the right with the orange and blue bin. And you deploy a bid ask position, but then you also want to deploy on top further a spot position. So you can do this with 2 transactions. And in this way, you can combine different shapes and to cover different ranges. And this can be very handy, especially, let's say, you right now the price is here, and you do not want to allocate too much into a token. But when a certain price hits, you'll want to have a higher allocation with every further price dip. So this is, for example, what you can see here. Or what you can, if you say, okay, I'm entering a market where I think it's going to move to a certain price and hover there for a while, then you can build kind of a curve distribution at a different price with this. So there are different ways of playing this. Or you can also stack them above each other. So you can have one bid ask position, but you already want to earn right now, because as we've seen, the bid ask position has very little liquidity where price is right now. So you can combine that with the spot distribution below, and with that you have kind of a hybrid between both then at the end with your allocation. So DLMM is just so freaking versatile in terms of building your position and managing, setting up a profitable strategy depending on where you believe price will go and where a pair is trading at. And this is it takes some knowledge, but once you get a hang of it, it's really, really nice. And it gives you a lot of kind of a lot of control over your position. And this is then, if you go into maker vaults, this is what the operators take advantage of, right? They have the whole base protocol set to work with and to make the liquidity as efficient as possible, and to have, when there are very strong price movements, as we've seen in the past week, they have all these shapes to work with in order to reduce impermanent loss of the liquidity in the vaults. And this is then at the end showing in the P&L numbers. Yeah, so this is stacking, and I would say we do one more stacking. I'm gonna go back to our little vault. Let's see, what kind of funds do I still have? I have still some ETH. I'm going to go now to the dashboard first. So now you can see the dashboard has grown a bit, have a bit more liquidity. There we go, boom, and updated. I can see all the different tokens I have. And then I can see here the overall fees earned, etc. And now you can see here, this is my manual liquidity, and this is my vault liquidity. So my vault liquidity as a liquidity provider, I'm laid back. I can just look how they're doing. And here you can see these different shapes that they're deploying. And for my own one, I need to take care of, right? So here in my own one, I can see here, is the liquidity active or not? I can see, okay, here the price has seemed to move. So here you can see just this little bin has started to be active in the ETH position that I deployed, and it's farming fees, and it might farm some Metro rewards, and this will accumulate over time. And I can see all these different positions. I can see my position, can check, is it healthy? And for example, this is inactive. So I can go in now and say, okay, why is it inactive? Okay, this is my bid ask, and Sonic has not dropped below this price. So this is good, I think, for everyone in the call. So this is still inactive, and as it gets active, it would show me, and then I know I need to go here and pull some bins out. And then here, what I have here is also another USDC. Which one was this one? Oh, this was a normal. This was our just normal distribution we did in the beginning with the simple mode. So you have a nice overview of your portfolio. You always see all the points you're earning, your liquidity, and you can see all the to have an overview of your positions. And what I want to do now is I want to stack, and I think this one is actually a nice one for it. So I have. Do I still have? Let me check in a second. I want to, or do I, or no, sorry, I use this one. So this one is a normal distribution, and I'm going to put a bid ask above it. And this is what I'm going to do now. So I'm going to take the same, manage liquidity. And I'm just going to take here. Let's say I want to do a bid ask. I only have Sonic, so I'm just going to do on Sonic now. I'm going to do a bid ask just on this side here to the right going up. So what I'm going to do is I'm going to go advanced mode. I'm going to put here 300 or 100, 250. I don't want to sell so many, but okay. How much is in this position? Oh, it's just some dollars. So I'm not going to put too much. I'm going to put 25, something like this. Maybe, yeah, 30 Sonic. And then I'm going to use bid ask. And then I do it one-sided here. And I want it to go all the way to this bin. So this is at a price of 0.33167. So I can look here, 33167. This is where I'm going to go to. And I'm going to deploy and stack this shape above the one that is already deployed. There we go. And here you can see. So what this position is now, it has a spot downwards and this kind of bid ask shape upwards. And this is how you can then combine different shapes by stacking them above each other. Okay, Yosso, I think we are through with the DLMM standard training. The next one would be kind of a teaser for a new training that is coming that we're still designing, which is for vault operators. So anybody who wants to go the next step and become an operator. But at the current stage, is there anything we should showcase which I missed?
Well, maybe the difference between operators and manual liquidity, because since each pin is its own NFT, you will
Mm-hmm.
pay the gas fees when you provide liquidity. So if you have a limited amount of funds, like smaller amounts, it could be more profitable to go to vaults rather than provide liquidity by yourself, since you
Yes.
pay gas fees. It's not much on Sonic, but it can add up if you deposit and withdraw really many times. But
Yes.
if you go to the vault, operator will pay the gas fees.
This is a good point. So especially if you're handling with smaller numbers, something that is, I think on Sonic it's really smaller numbers because the gas fees are quite low, but it would add up, especially if you're rebalancing each time, knowing you would pay the gas fees here. Whereas in a vault, if you go into a vault, this is all done by the operator. So the operator pays the gas fee costs, and that's why it can be more efficient, especially if it's just some dollars, to rather put it into a vault from a gas efficiency point of view. Yeah, because if you hear vaults, it's one transaction, right? As we've seen.
Yeah.
To deploy, you have one transaction in and you have one transaction out. And the one transaction in is you put the liquidity in and you get the MVT token. And when you go out again, you give back the MVT token and you get the tokens allocation of the vault back. So let's say in this case, this one Bitcoin and USDC. Something maybe to note there, which is that why it's really nice. I'm not a tax advisor and I don't know too much about it, but I do know that if you do manual DLMM, depending on the jurisdiction where you live, it might be a bit more difficult to then at the end showcase everything you did there, right? Each rebalance and stuff. In the vault, it's really easy. You have two transactions in your wallet, one in, one out, price difference. That's it. I think this simplifies things a lot. Really depends on your jurisdiction, but maybe it can be interesting for some of you as a side note. And you saw we forgot to remove liquidity. We have not showed that. That's like we showed allocating, but we have never shown removing again.
That's true.
So I'm going to do this now. We have here Bitcoin USDC, and I say, look, you know this price down here. I can use these USDC somewhere else, and I want to remove them. I only want to have them until, I don't know, let's say 115K, somewhere here. So what I'm going to do now is I can already harvest some very little money on my $80 that I provided. But I can say here, okay, I want to remove these bins. So what I do is I go on withdraw, click. And as I withdraw, I'm going to go up to 115, I say. Okay, yeah. And I can just choose here the range, which bins I want to withdraw. I'm going to withdraw these. I click remove, enable, confirm, and remove. And this is at the end how you can redistribute. So imagine the price would have fallen here, down here. This way I can pull out liquidity, then convert it from USDC to Bitcoin. But this is how it how you can then reallocate in a position without taking the entire position out and in again. If you do manual liquidity, it's really very flexible of just taking single bins out and bringing and deploying again single bins or bin shapes. You're very, very flexible with that. And the same is with maker vaults. If you want to remove liquidity, so I'm going to go to my dashboard, and now I want to remove liquidity. I'm just say, I don't know which one. Let's say here, just to showcase how it goes. I can see this one is very profitable, but I'm still going to manage my liquidity here. And now if I want to withdraw, I can here decide how much. So let's say I want to withdraw 50% and I remove it. And this is something to note, is that what happens now is your tokens go into a withdraw queue, and with the next rebalance of the vault, you will be able to claim it. So right now you see, okay, I'm in the withdraw queue, Bitcoin USDC, 50% of my liquidity I'm removing. This is the amount of tokens, and I'm in a withdraw queue. I know from the heat map, vault stats, that this vault is rebalancing many times a day, and the maximum amount I will need to wait is 24 hours. If I say, look, I need it right now, many vault operators have a forum inside the Metropolis Discord. You are able to go into our Discord, join it. There is the Maker Vault forum. Look for the operator. If he's running a forum there, you will be able to go in and say, look, I need it quickly. Is it possible to rebalance this vault? This might give you it that the operator rebalances, but just note there's not the expectation towards the operator to do this, but it's something you could do. But in general, I would know here, okay, the rebalance will likely be sometime the next 24 hours, and the operator sees it. So he sees a withdraw queue, he sees that somebody's waiting to go out, and if he sees it, then he would, I would then be able to just click here and click claim. Yes, so happy we covered this part out. I forgot the withdraw part, so happy we could we added it here now, so that you see how that works as well. One thing, we have all of this what I'm sharing here is also in our docs, not in that detail, but especially about the Maker Vaults. Just go on Metropolis. If you go all the way to the bottom, you have here documentation, and you see here Maker Vault pools, just generally about Metropolis or tokenomics, everything you can read up here. And you will also see more information here on what I shared before. So feel free to take a look at this, see how these things work, and it gives you, it guides you. So if you say, hey, some parts you didn't quite follow, you want more information on this, this is a repository for you to see how all this information that I also shared right now, you can read up here in the documentation. Okay, then let's get to the last part, and that is vault operators. And I just want to skim really through what's the idea for vault operators. Anybody who has followed the stream until now, is I think showed dedication. We're almost at 2 hours, and there might be potential for becoming an operator. And the operator business case in general at the start is the idea is you do what you love. So if you're somebody who already loves DLMMing, providing liquidity, you do that for your own funds. With MakerVaults as an operator, you can do that and earn the operator fee on top. So you can have a vault and running, people can join that vault, and you will earn on the performance of that. This is here just as an example, but just to get understanding, you have a AUM fee you can set between 1 and 10%. Imagining you have 3 different pools, you have a certain amount of liquidity in here. These are the general yearly earnings that you can then expect because it's on the liquidity. Obviously, under the assumption that the liquidity is somewhat stable in your vault, and also under the you would have gas fees, so also under the assumption that you're not rebalancing every minute or every 2 minutes. But generally speaking, this is then kind of the business case that you can look at there. How much liquidity would you need with what AUM fee and what could be the earnings behind? And MakerVaults are just at the start right now. We don't even have the 30-day P&L. And now that we have the 30-day P&L and we're going to soon launch the activation layer, and the whole incentivization of the vaults is going to start. So for anybody out there, it's not too late. Yes, the first operators are there already. They have been already accumulating, let's say, knowledge and accumulating KPIs to showcase, but we're at the very, very start of this vault ecosystem. Just to repeat, this is the first ever fully permissionless vault ecosystem in DeFi. This doesn't exist anywhere else. So this is the very, very start. If you want to get into this, it's not too late. It's definitely not too late. You're super, super early. And you're also not alone. We have trainings just like this one. And we're going to do another training specifically for people that want to become vault operators, that make it easier. There is a maker club. This is on Discord as well as on X. There you see operators or also DLMM, generally using DLMM, showing their strategies, showing what they're doing. Join it, take a look there. You will see help there. I mean, we have operators really share insights, share learnings. It's a cool, I think in Discord especially, and as well as in the X, it's a really nice sharing of knowledge. So it's you're not alone. You're in a community, and then we're gonna have maker streams. So if you want to promote your vault, we're not sure if we're going to do it monthly or every 2 to 3 weeks. You will get a chance to join one of our streams that are on X, and with that, be able to promote your vault, show your strategy, and also then learn from the others, right? So operators will join there, show their strategy, show what worked well, what not. So, and I think this is really nice for people who want to become operators, but also for people who are just interested in vaults as a liquidity provider. So joining these streams, then you can see, you can hear from the operator, okay, what's the strategy? Are they running for example, if they run an if they automated it, what's kind of behind it? How does it change shapes according to market conditions? So you can learn a lot from these people. And I think I personally find really interesting if I go into a vault to know, okay, what's the mindset of the operator behind? What are the tools he's deploying? I think this is really, really cool. Yes, so if you want to become operator, there's infrastructure, you're not alone. And we're really, the community is really happy to help there. That is the final slide. Really happy for everybody who tuned in and everybody who sticked around for the entire training. It's almost 2 hours. We went all the way from simple vault deployment to stacking DLMM positions and a little teaser for the vault operators. Thanks everyone, and big thank you, Yusuf, for joining me today and helping that I don't forget anything and bringing some good insights here and there that I didn't even know about our own protocol.
Thanks for having me.
Okay, bye everyone, and have a good rest of the day and a good evening or day, depending on where you are.
Okay, bye bye.